Well, pretty interesting twist from Friday's announcement to what we have seen today. We did see, of course, oil prices spike a bit following that announcement, but then seen the, I would like to call the expected drop in prices. What is your take really to, what's really playing out there? Those who say that this will only lead to a minimum impact on the markets. What do you say?
I think the reality is this would only lead to a minimum impact on the market. I think expectation in the market generally before the meeting and announcement on Friday was one of caution. So hence the rally in prices in the international oil market. But when the announcement came in and the ratification on Saturday, stating the 1 million, the market, as you see as of today, a couple of minutes ago, is up 74.12. So that tells you that the market is realizing that expectation is actually not going to take place. I'll give you an example. The market has realized the disruption is only backfeeding what is missing in the supply chain anyway. An example is Venezuela and Libya. Those two, from the previous numbers that were given, are short by about 800,000 barrels. So if you take 800,000 out of the 1 million announced, there's only a differential of 200,000 barrels a day. The markets realize that. The pricing is taking position again.
Kola, I can agree with you on that. It just seems as if the market is actually expecting, or what I say, even welcome this increase in supply. You have Iran's production, which of course is unclear at the moment owing to looming U.S. sanctions. You have for the first time in 12 months, U.S. energy companies, cutting, one oil rig, the first reduction we'd actually find in months. Then we also have, of course, what's happening with Syncrude crude in Canada as well. Now, with all this, of course, this increase of about 1.2 million barrels clearly is going to fill in that spot. But let's talk about prices. There are those who feel that, of course, it will remain tight throughout this year. What is your take? Where do you see oil prices hovering between now and the end of the year?
My evaluation of the market price-wise is going to be between 72 and the magic $80 mark. And that is for the same reason you just explained. The uncertainties around Iran and when that comes into effect will actually knock out, give or take, between 500,000 to 700,000 barrels of the international market. Already you've seen the announcement from people like Total taking it easy on their investment potential in Iran. Also look at what is happening in Venezuela's very, very considerable effect on the market, because the heavy crude from Venezuela is going to the North American refineries, and that is coming off the market non-stop, and that in itself will further exacerbate the tightening of prices. So my call on the market is 72 to 80 will have a price mover, is what we look at this year.
So, Kola, you do agree that the 1.2 million expected output is only going to be 100% compliant on paper? Will I say in theory? There are those who say we will not see that 100% compliance.
No, I think with 100% compliance, in effect, will take out what has just been put in place. So right now, my view is there will be further tightening in the market, which will further put pressure on prices on the upswing. Now,
of course, in an interview, with Barkindo, he did mention, when asked if, the decision was influenced by Trump's tweets earlier last week and in the past few weeks, and he did say no, there was no political influence to what we're seeing at the moment. So do you think what's playing out now is more what I call it now a compromise between, meeting up consumer pressure, maintaining oil output, and, of course, protecting the oil-producing economies, of course, not to harm them by any way? What do you think is playing out here?
I think there's got to be a balance, right? For the United States being a heavy producer as well and a heavy consumer of oil is a very important player in the sector. And what the President of the United States says has a leading influence into the market. But be that as it may, considerable positioning from the OPEC quartet is also very, very important. Also, the non-OPEC players. If you tie all this together in balancing and getting a unified position that will make it count for everyone, but taking into consideration we do not want economies going into a tailspin again in a depression. A very high oil price will further increase that pressure, and a lot of economies cannot sustain that. The European partners cannot sustain that, nor the North American economy. More importantly, also the emerging market economies cannot afford very expensive crude oil right now. So I think a compromise right across board will be in the pricing region we're looking at.
Well, just let me go back a bit. Just help me explain this. Now, although, of course, we believe output really has been below the targets before meeting, there are some analysts actually who say that there is little space for large-scale output at this point in time. Do you agree?
No, I don't agree with that. If you look at what has happened, we don't forget we've just come out of a very low oil pricing. Now, most investments that should have taken place the last 18 months have been delayed. So you can imagine with those investments being delayed, only now being looked at again and revisited in financing again, that those projects coming on stream will take another 9 to 12 months. So there will always be a gap in the production stream.